What if I told you one of the most controversial cryptocurrencies, XRP, might be secretly backed by financial giants like BlackRock and Bank of America, and it could flip the entire crypto narrative overnight? Because today, we're not just talking rumors. We're talking real volume, regulatory shifts, and strategic moves that could make XRP the sleeping giant of crypto. But here's the twist. Is this just another overhyped altcoin fantasy? Or are we witnessing the quiet setup of a financial revolution? This is Andrei Jihk's Insights. Stick around because by the end of this video, you might start to see XRP in a way you never did before. Now I know what you're thinking. XRP? Didn't that ship sail? Well, not quite. Canadian XRP ETFs just launched, and within weeks, they've already clocked over $280 million in trading volume. That's not noise, that's institutional movement. And then there's BlackRock, the $10 trillion asset juggernaut, rumored to be exploring XRP's blockchain for asset tokenization. Wait, it gets better. Bank of America might be entering the chat, partnering with Ripple in ways that could shift how global transactions are handled. And if that wasn't enough, there's a new bill, the Genius Act, clearing the runway for Ripple's stablecoin, Real USD. Regulation plus tech equals a massive tailwind. Before we dive deeper into Andrei's analysis, smash that like button if you enjoy this kind of deep dive analysis. It tells the algorithm that this is the content you want more of. Now let's get into it.
Now, in the middle of June this year, Canada became the first major market to greenlight spot XRP ETFs with Purpose Investments, 3iQ, and Evolve. They all launched their funds on the same day. And in just the first week, those three ETFs traded about 280 million Canadian dollars worth of XRP. What's even more interesting, though, is that these ETFs outpaced the initial volumes that were seen in a lot of the early Bitcoin and Ethereum funds in Canada, which means that demand for XRP is really high right now. Now, at the same time, though, here in the US, there were 11 separate filings for spot XRP ETFs. They are now pending with the SEC, and analysts from Bloomberg are now assigning a better than 80% chance that at least one of these US XRP ETFs will be approved by the end of the year. Now, if this were to happen, though, we could see the same pattern that happened in Canada, that the XRP ETFs could see more money flowing into them than both Bitcoin and Ethereum ETFs. But next up, let's talk about regulation and why it actually matters for XRP's real-world use cases. Because on July 18th, Congress passed and the president signed the Genius Act, which is the first ever federal framework for dollar-backed stablecoins. Now that this law is in effect, it's going to require every stablecoin to be 100% backed by liquid assets, have monthly reserve audits to make sure that everything's legit, and stablecoins will have to meet strict consumer protection standards. Now, for Ripple's XRP, this is huge because it clears the way for their own stablecoin, Real USD, to go live on the XRP ledger without constant uncertainty. Now, once Real USD is in circulation, it can fuel what's called ODL, or the on-demand liquidity, which is Ripple's product that uses XRP as a bridge currency to settle cross-border payments instantly. Now, that's a lot of complicated words, but imagine banks or payment providers on-ramping dollars into Real USD at one end, moving the value on the ledger in seconds, then off-ramping back to dollars on the other side, all without the delays and fees of traditional banking. And because Real USD sits on the ISO 222 standard, the XRP ledger has sub 1 second finality, 1,500 transactions per second capacity, and very, very small fees, which means it could process billions and billions in daily volume at a tiny fraction of today's costs. So while these ETFs are making all the headlines, I think the behind-the-scenes Rail upgrades are really what turns speculation into real adoption. But now that the Genius Act has been approved, there's something really interesting that's happening in the banking and credit world. Credit card companies and payment networks will have to start partnering with crypto companies. To put this scale into perspective of just how big that would be, global cross-border payments crossed around $190 trillion in 2023. and there's estimates that it would reach 290 trillion by 2030. Now, stablecoin market caps are also estimated to reach $500 billion to $1 trillion in the next few years. And even capturing just a fraction of that market would represent a huge opportunity. And companies like Visa have already figured this out. They've already announced plans to integrate digital payments on its networks. And there's rumors that Bank of America is exploring a partnership with Ripple to leverage on-demand liquidity and real USD.
Bank of America CEO Brian Moynihan says the bank would consider a stablecoin if U.S. regulations allow it. Speaking at the Economic Club of Washington, D.C. on Tuesday, Moynihan said it's pretty clear dollar-backed stablecoins will garner mass adoption. He also said that if the Trump administration and lawmakers on Capitol Hill pass stablecoin legislation, Bank of America would go into the business of stablecoins.
Now, to be very clear, this is still a rumor, but if it were to happen, that would be huge. Now, at the same time, though, Ripple has applied for a U.S. national bank charter with the OCC. They're applying for a bank license. And if it's given, it could settle deposits directly with the Federal Reserve, bypassing traditional banks completely. So when you combine all of this, though, a bank license and the potential partnership with other banks, it could really push XRP and its ledger in the center of the U.S. financial plumbing system. And that would dramatically increase the chances that institutions would adopt the ledger for the next part that I want to show you, which is tokenization. Now, tokenization is going to change the world and how we invest.
I believe the next generation for markets, the next generation for securities will be tokenization of securities.
The tokenization of financial assets could reach multiple trillions by 2030. But here's what it means. Tokenization is the process of taking something of value, like the stock of a company, a piece of real estate, or even a piece of a Pokemon card, and turning it into a digital token on a blockchain. So imagine owning a fraction of a beach house that you think will go up in value. Instead of buying the whole house, which most of us can't afford to do, each token will represent a tiny slice of that underlying asset. And because it lives on the blockchain, these tokens can be traded instantly, anywhere in the world, 24/7, without the usual layers of brokers, custodians, and clearinghouses that slow everything down and add costs to traditional transactions. Now, I can't overestimate just how big this will be in the future. And believe it or not, Robinhood is actually doing this right now. They are tokenizing the US stock market as a way to allow the European markets to buy US stocks.
What we announced last Monday in the south of France are several products for the EU stock tokens, which give exposure to public listed equities. We have over 200, and those are available 24/5, finally giving our European customers exposure to US stocks.
It's kind of like a backdoor access to US markets without needing regulatory legal approval. Now, the rumor, though, is that BlackRock, which again is the world's biggest asset manager, is quietly looking at blockchain platforms to be their backbone for issuing tokenized versions of not just stocks, but everything from treasuries to ETFs to fractional real estate shares. So if BlackRock or if any other blue chip asset manager were to choose the XRP ledger to create and settle these tokenized assets, it would instantly validate Ripple's technology. As of right now, XRP's market cap sits at about $188 billion with roughly 59.2 billion tokens in circulation. Now, in a conservative scenario, let's assume that BlackRock does a test pilot and they tokenize 5% of their AUM, or assets under management, which, remember, they're managing roughly $11.6 trillion. They won't tokenize all of it at once. That's not realistic, but 5%, that's doable. The question is, what would they back that 5%, or $580 billion worth, with? It could be US treasuries, it could be some form of dollars, but it could be a lot of things. But let's imagine BlackRock takes a conservative approach and they take 20% of that 5%, which is $116 billion. So it will need $116 billion worth of XRP on chain, which, dividing 116 billion by the 59.2 billion XRP outstanding, equals about $1.96 of incremental demand per token. Add that to today's $3.19, and you're looking at roughly $5.15 per XRP. But let's take it a step forward. The base case. Not conservative, but maybe something more realistic. What if BlackRock backs 50% of that pilot program in XRP? That's $290 billion. And the math comes out to about $4.90 extra per coin. Stacking that on top of today's price would put it at roughly $8.09. But now let's imagine a dream case scenario. Let's say the rumors are true, and they put 100% of that $580 billion pilot program, and they fill it with XRP demand. That would imply an additional $9.80 per token. Layer that on top of today's $3.19 and you land somewhere around $13 per coin. Now keep in mind, this is just institutional tokenization demand, which alone pushes it between $5 to $13. But when you then factor in continued ETF inflows from Canada, the potential approval of US ETFs, growing real USD-powered ODL volume out of the Genius Act, and on-chain accumulation by whales and other investors, the potential of other bank partnerships, and even getting their own banking license, and you can see that the path could be much, much higher.
That's a wrap on today's XRP deep dive, but the conversation is just getting started. So let me ask you this. After everything we've explored, BlackRock's rumored interest, the XRP ETF launch in Canada, Ripple's stablecoin Real USD, and whispers of Bank of America quietly getting in bed with Ripple, do you still think XRP is flying under the radar? Or are we looking at a mirage in the crypto desert? A hyped illusion fueled by speculation and recycled promises? I genuinely want to know what you think. Are we witnessing the rebirth of a future financial rail? Or is XRP simply a relic from a bygone bull cycle? Drop your thoughts in the comments, whether you're bullish, skeptical, or still on the fence. Let's spark a debate that even the institutions can't ignore. And hey, if you found value here, hit that like button. Share this with your XRP crew. Most importantly, subscribe, because the next wave of financial disruption is already building, and by the time the mainstream catches on, it might be too late. Now here's the real question. Will XRP become Wall Street's stealth weapon in the digital asset wars? Or will it fade into crypto obscurity while the world chases newer narratives? Only time will tell. But until then, comfort the finance and stay for XRP. Thanks for watching, and I would see you in the next one.